When people are frantically selling, I use the chance to buy. Did I buy stocks this week? Will I buy stocks next week? Well, you just have to stay tuned. You're listening to the StockInvest.us podcast Trading Tips with Jim as we head into week 7.
Tick-tock goes the market clock. Bulls run wild, bears don't talk. Up or down, it's a coin flip game. Buy low, sell high, don't lose your grip. Stay sharp, stay fast on this trading trip. It's Trading Tips with Jim. Win or learn, never gives.
Last week I said I believe it would be a red week ahead of us. And so far it's been a red week when Nasdaq is down almost 4%. It is still Friday, exchange hasn't opened, the podcast is being prepared for the weekend so it can get ready for you for the next week. But it'll have to be a miracle for Nasdaq to go in the green, falling from 23,462 points down to 22,500 points. Dow Jones is actually up, but just by 0.03%, and S&P 500 is down by 2%. So far, the futures, they are indicating that we will have a green day, but knowing that markets are sour and people are scared, it may start green and red. We saw that, for instance, yesterday. And I opened with saying, when people sell, I buy. And in last week's podcast, I told you that I think this week, which we are in, would hold buying opportunities. So far, I've been reluctant to buy stocks, but I have bought crypto. I've used the chance to add more Bitcoin to my portfolio. Bitcoin falling down to 74,000, I think it's standing right now, is, in my opinion, a huge overreaction. I bought in Christmas when it fell under 90. I used this chance again to buy at 76. And I might be sitting in red for a little while, but usually these purchases turn out to be green. I've been in and out of Bitcoin many times and always use the chances when it falls hard to buy. Crypto is a chapter by itself, and now everything is shaking a bit in the market. We had the gold hype, gold going all the way to 5,500 then, and silver as well going strong, and then everything collapsed, money being shifted around, but I start to see normality coming back, because it was an unnormal situation. Dollar being sold, dollar was going from 115 up to 120 against euro, and weakened against euro, and gold going sky high. And most of this was, in my opinion, just regular people and Europe betting on very strange things. Doesn't make sense in my mind. I see a stronger dollar for a year. Dollar has gone back to 1.17 now, showing all the signs of strengthening. And even the 10-year treasury yield, which we usually follow, has gone down a little bit to 4.21. So gold was hyped, everyone moved into gold out of stocks, and then gold collapsed. Now they are moving back to what seems to be the most secure item, which is US debt. And US economy is super strong. It's much stronger than what everyone seems to print out in the media, because one number after the other shows the same thing. US is expected to grow 5% this year, surpassing China, which has been growing for many years, and for sure Europe. Where you will put your money? Well, most likely you are into many AI stocks, and AI stocks had a brutal week because we got people sold off the gold. I sold gold before it get to the frantic hype, using the chance to get into a few stocks, which I sold later. By the way, these were Tesla and Nvidia. I sold them both at very good levels. And this week, I will tell you if and when I will be back into the stock. We'll come in just a little bit. Anyway, so people go back to stocks, and then they get scared about AI, and that has to do with quarter results coming out. And people start to worry. Will, for instance, Microsoft get their investments into OpenAI back? Then I believe it was Google, might be wrong there, but Google said that LLMs are coming to the end of what you can squeeze out of the melon. In the beginning, you have this huge leap for every version coming out. No, it might be harder and harder to get real good stuff out of AI as we know it. That was a statement, maybe not the fact. It remains to see. The logic is, of course, there that you cannot have this doubling every single month. But they said the same thing, by the way, about RAM for hard disk, memory for hard disk. I remember this so very well. I was at a seminar back in 97 maybe, and then it was back to scratch disks and long, I mean, these are way back, 30 years back in time almost. And one very smart guy, he said that memory will double. In his opinion, memory will just double on every cycle, and memory has grown, but back then it was the same thing. No, it has reached the absolute level. You cannot squeeze more out of a scratch disk, and then you cannot squeeze more out of the RAM chip. It cannot keep going. But both of them, all of them, our storage, our internal RAM in the computer, everything has just keep doubling. Not sure LLMs will do the same. I'm just saying that the reason for the huge AI fall now is the consensus among the smaller investors that it might have reached the hype. But this, my friend, this opens for buying opportunities. And if you look at stocks, all the AI stocks, they've been really hammered. This week, I wanted to give you some stocks. I will give you a few stocks, but I wanted to give you some stocks with high potential upside. But the fact is that if you look, for instance, at Nasdaq, you see that there is so many options. I said I will tell you if I bought stocks or not, and said that okay, I went into crypto already, and why have I not went into stocks yet? Well, that is because if you look at several charts, we see that relative strength index is getting very close to oversold. Things have just fallen. Look at the Nasdaq chart, look at Big Bear AI, look at Rigetti, look at all of them. You see the same thing. Even Tesla, even Nvidia, but they are not oversold. And this is the part where it can turn. There is a slight chance that it can turn, but at the same time, it's also where the panic levels are, where you can get these really huge sell-off. And a part of me says that there is a chance that we will have a sell-off either today on the Friday or early next week, where you can get these super buy. But anyway, how I look at it, there are so many good buys now. It's just a matter of time, because I believe all these stocks will be much higher if we go 6 months ahead. It might be if you buy now that you will sit in red for some time, but you should be trying to find the bottom is very hard. I never ever try to find the exact bottom. When I think the bottom is close, I start to buy. That is what I'm doing with the Bitcoin. And that is what I did with the NIO, which is in the $1,000 challenge. And finally, NIO promised that quarter 4 would be the first quarter to be profitable, but didn't happen. But yesterday, in the midst of all the red day, Nasdaq was down 2%. NIO pushed the news that they will actually have profit in Q1. So they had a profit warning, which is now absolutely good news, because this, my friends, mean that NIO should move hard. And NIO, everyone agrees that NIO should be anywhere between 6 and 8. And with the profit warning, I cannot see anyway NIO will just continue to go. It went yesterday in a red day, and pre-trade today shows that it will continue, but now there shouldn't be any reason, unless markets get so deeply red that everything is pulled down the toilet. But there shouldn't be any reason why NIO shouldn't push, and that we can get back on track on the $1,000 challenge, which will be more about in the end of the podcast. Getting back to stocks, well, so there is so many stocks you can pick and choose. Most of them will be very, very good buys. I have some stocks, I will mention them now, which not personally I like. I told you in the last few podcasts that the retail is absolutely where I want to be. I was hoping for Starbucks to fall a little bit more. Starbucks being stubborn, but Starbucks at current level is a good choice. Chipotle at current level, absolutely a good choice. Dollar General seems like an even better choice. American airline, the same thing. So there you have 4 stocks, which I absolutely like what I see, and they are, in my opinion, so strong, so big. Most of the downside is taking out. The fundamentals are in place. So Dollar General, American Airlines, Starbucks, and Chipotle are all stocks which I have a very hard time to see should fall much more, with such a great upside. Several of them will also pay dividend. Then there is Tesla, then there is Nvidia. These are stocks which I bought last time market was crashing. I sold my goal to buy Tesla and Nvidia. I doubled my money in both of them. I followed Nvidia, for instance, from 88 to 208. And I cannot remember exactly what it was with Tesla, but it was a double as well, almost. And I said when I sold these 2 stocks, Nvidia and Tesla, that I especially love Tesla and Nvidia as well. But I think Nvidia was overpriced when I sold it. And that I will get back for sure into Tesla and most likely Nvidia as well. Checking the charts before the podcast, I can see that Tesla is under 400 and I sold it for 458, 454, somewhere up around there. But I believe the really good buying point for Tesla is around 370. So I'm holding my finger on the buy button. I just hope for something to crash the market a little bit more. I love the red days. Yes, it hurts a little bit no matter what sort of portfolio you have. But I have stocks I want to buy, and can I buy them cheaper? Nothing better. So getting Tesla down to 370, I just hope for that to happen. Have some frantic sell-off, have some stupid things going on in the market, big falls for a day or two. Let me try to pick Tesla. I will do the same thing for Nvidia, but in my opinion, Nvidia has to go down to around 150, currently around 170, before it becomes a very, very good buy anyway. Interesting, currently around some 170, as I said, but I believe 150 will offer a much better buying opportunity. Most stocks oversold or getting close to oversold, but what does the signals say? And the signals across all the stocks that we analyze says that 31% is currently giving buy signals. This is neither high, neither low, it is just in the middle. But if we go to Nasdaq, we can see that it has dropped from 7 to 12. Last time I was screaming shout, Nasdaq was down at 7, and you can go many podcasts back. It would be probably September or something last year. I said Nasdaq at 7 is such a buying opportunity. It's just screaming buy. And then was the time when I bought huge last time. At 12, it still has this thing where it can fall. It can be a red week next week. I will give my answer to what I believe very shortly. But and we can have the buy and the sell signals down again to 7, but we are at levels where such a nice position. Dow Jones at 33 is neither high neither low. It's nothing special. We have London at 34, Oslo at 36. We have National Stock Exchange at 19. And by the way, I read that Volkswagen is turning the ship. This comes to what I've been saying, especially last half of last year. I believe if you are to invest into Europe, I would invest into German economy, because they are turning their very bad run ship around. It got really dark in Germany now there is a lot of signs, especially political signs, saying that things are moving in the right direction, and there should be an upside to several major companies in Germany. Some of them has already run. Tokyo 47, Shenzhen China 36. There is no scare in the market, in the major market. It's fluctuations. There is no absolutely this doom crack kind of thing. And I often laugh when I read the news, and there are so many predictions. In general, you just have to stay tuned. Yeah, of course I can be wrong. We can head into the major crack, bringing Nasdaq down to 15,000 points, 12,000 points. Chances are very slim. Right now, Nasdaq is at the absolutely support of the trend lines. Volume did follow Nasdaq down last day. I love all of these things. It has turned several times around exactly where it is now on the relative strength index, 27.33, somewhere around there. And it is currently 34, so we are, can be any time now that it turns. Major sell signals from the moving averages have been issued, and this goes to another thing which I said early this year, that for first 3-4 months I don't believe Nasdaq will perform very well. That was my bet, and now I'm saying that I'm looking to buy. It is for the short-term reaction up, because it's oversold, it gets oversold, it's hammered down. You will have this classic bounce up. I will make my anywhere usually from 5 to 40% on the bounce up. We'll be happy about that, then I will go into more cash positions again, waiting for next opportunity. So with that huge sell signals issued, these are not always necessarily true, but it just tells me the same thing, that there is a higher chance that we will have a horizontal move up and down than Nasdaq pushing very hard. But overall, everything is lining up for a great decade. We are getting to the very end of this podcast. I know that a lot of you are sitting waiting for tips, but I already gave it to you. I'm saying that a lot of stocks are heavily hammered. This is an opportunity. But then we get to the issue that many of you are maybe struggling with covering your requirements because you have been in leverage positions. So some of you may be even sitting with calls, and don't do that. Most of you will sit in a position where you cannot infuse more money into your portfolio, probably stretched it already as is, and you just have to wait it out. If that is the case, let it be a lesson that you want to sell on green, buy on red. So when the markets get up and your portfolio get in better shape, remember that being fully exposed never is a good thing. You never heard me only a few times, like I said, Nasdaq goes down at 7. I told you now I go full in. I've pushed all my liquidity into the stock market. Other than that, I usually float around anywhere from 60 to 100%, depending on. I have other assets than stocks, of course, but for my stock portfolio. And when I think it's a very nice time, I usually sit up around 85%, but I always have cash for the good buys because they come. When you get hyped news, negative news about something, stocks are hammered. Single stock is hammered over news which has no root in reality. It's rumors. It is media going, for instance, after Elon Musk. You get an instant fall. You have these situations all the time. They always offer very good buying opportunities because we move like sheeps, and that is never how you're going to make the big money. You can accumulate some over time, but if you want to have these higher returns, you have to do the opposite of everyone else. Where was I? Well, I was just telling you, and you were waiting for some more. But I gave you 6 stocks. I will repeat them once more. I think that Starbucks, Chipotle, Nvidia, Tesla, all of these, Lulu, Dollar General, and American Airlines are companies. Actually, 7 of them, good opportunities. But just look at any chart you want. You see that most stocks have fallen hard. Offers an absolutely nice rebound. Getting to the very last part of the portfolio is the $1,000 challenge, where I try to grow $1,000 as fast as I can. I was up at $5,555, but currently the portfolio is down at $3,309.07. Because I went in long before Christmas. I went into, I cannot remember exactly when I went in, but it was a little too early. Could be September, maybe September, October. I went into NIO with the argument that I absolutely love it. I have a huge private stake in NIO as well, because I believe it offers such a great upside, and I want to be there when it comes. So I went into NIO at $5.10 in the $1,000 challenge, and it skyrocketed. Then it fell back, and it has even been trading at $4.40, I think, during the week. Currently sitting at $4.70, down 7.8% since it was put into the portfolio. But as I said in the opening, NIO has pushed profit warning. Actually, it's a little funny that you give it as a warning, but it is a profit warning. They actually warn that, we go from losses to profit. They have given an estimated range for Q1. And you have to do this to not shock the market if they're extraordinary. NIO have been losing money for years trying to be the biggest one. They have delivered more than 1 million cars, trying to beat the Chinese market, and also started in Europe. And with that being said, with the profit warning, they hit it when the market was red. If it had been on a green day or a green streak, a green week, NIO would have easily gone 20-30%. But we see this when news are pushed in red markets. They don't reach their full exposure. But investors, the bigger investors, they already started to buy NIO last week, and several of them, probably because they knew, had some inside information, etc. And several analysts also increased their targets for NIO. Maybe I will be wrong, but I will be surprised if NIO is not on the roll to 7.8, which was the target last time. It actually reached it, but I told you I would tell you before I sell in the $1,000 challenge. I told you if it gets to 7.8ish, I would sell, take profit. And now it was under 5, I said again to anyone who doesn't have NIO that I think it is a great opportunity to make some money. Now I think it will be on the roll at least to 6, 7, maybe even 8. It will position itself for further break. We just have to wait and see. I will be back next week. That may be the last week, because I'm going to Zanzibar for a holiday, getting closer to the end of February. So I will be away for 2 weeks, where I will not have the podcast. But anyway, I will be next week. I will be back. I hope you will be back. I hope you like the podcast. I hope you subscribe. I hope you, of course, hit the like button. More than anything, I hope that your portfolio is green, and I hope that when we get to the next end of next week, that it's much greener than it was at the beginning of the week. Until then, just have a super week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.